William, as Alicia says, we have seen some more volatility coming through to that rand, but it has been trading below that 760 level against the dollar. And it appears that it's settled in a slightly weaker trading range following last week's events in China and the US.
Yes, this morning market movements have been dominated by exporter flows, and we saw some selling interest above 760, which we touched briefly. We've also seen offshore market participants come into the market against selling dollars, and thus far it's been a fairly quiet and subdued session compared to last week. We ranged between 757 and 762. At this stage, all eyes are obviously on the MPC and what's going to come from that. And then, as you said, the figures, the inflation figures on Wednesday, and then the market will be all eyes on the FOMC in the US.
Well, perhaps just starting with those international players, because last week they really were lightening the positions on emerging markets. You said you're seeing some of them coming back in, selling dollars and buying up emerging market currencies. Do you think that's going to support the rand in the short term?
Well, very short term it has so far this morning, and we've seen on the local equity front, initially we had a little bit of a sell-off, mostly in commodities, and then we saw interest in Naspers and MTN specifically, where we saw some buys of those stocks, and we also seen, as I say, the strengthening in the rand, possibly on the back of that, and possibly just on some sort of profit taking ahead of the SARB MPC. I think the populist view would be that the SARB should cut. I think the consensus view, and probably the more realistic view, is that the MPC will come with an unchanged verdict, and we'll have to wait and see for that. But in my opinion, that is possibly the way the market's heading, and that's what all indications are at this stage. So possibly that's also slightly supportive of the local equity markets.
And of course, that's going to be a very tough balancing act for the Reserve Bank today and tomorrow, because on one hand we have retail sales for November coming in last week, minus 6.6%. We have a weak manufacturing sector, but then we do have the unknowns of Eskom's tariff increase going forward, and what that's going to do to inflation. Of course, the MPC isn't going to really have that full inflation information when it winds up its meeting tomorrow, because our CPI for December only gets released on Wednesday.
Well, you'd like to believe that they're going to have some sort of insight into that, but I think while the mandate remains that they should focus on the inflationary side of the business, I don't think we're going to see any moves in that regard. I mean, obviously the populist request would be to stimulate the economy, but I think the other side of the figures that they're not going to be able to see just yet is what the effect is going to be of a higher oil price and possibly a lower gold price and commodity prices across the board on that. So I don't know what it's obviously a very difficult decision, but I think if they stay with their current mandate, I don't think we'll see any changes in that.
Now, William, do you think that they are going to stay with their current mandate, or that mandate could be changed? Because of course we had reports coming out of the ANC's Lekotla last week that the ANC would like to see the Reserve Bank being nationalised, and perhaps that would be a move that would help it to exert more authority over the Reserve Bank and more influence over monetary policy, and to take jobs and growth into account.
Yes, I think, obviously over time that could very well be a possibility. I know the numbers of in the region of 12 billion rand bandied about to buy out the private stakeholders. The point is, I think currently as Mrs. Marcus's mandate states, that she'll be focusing on inflation and not job creation or growth. And so I think for the moment it's obviously a balancing act, but I think, as I said, we'd probably see a status quo remain unchanged.
Of course, at the same time, we also have the Federal Open Market Committee beginning its two-day meeting tomorrow. And of course, it goes into the meeting not knowing whether Fed Chairman Ben Bernanke is going to have his contract renewed in February. What's your feeling on that, and how might that add to the volatility we're seeing on markets at the moment?
Well, as I say, it's a wait-and-see type of scenario. We've got our own MPC and then the FOMC. I think for the time being, I don't think whether Mr. Bernanke's contract is extended or not is going to have any bearing on this, and I think the talk from Mr. Obama regarding regulations in the banking sector regarding proprietary trading, those possibly have put a damper on growth prospects for the next while, and thus I believe also we're possibly going to see a slightly more dovish stance come out of the FOMC for the time being. because I don't think at this stage we want to create any more, or that they would like to create any more uncertainty. And the Fed has generally been very good at projecting and telegraphing what their intentions are, and at this stage I have to say that I believe that their rates will remain unchanged, and that we'll see a slightly more dovish stance from them in the short while going forward. There was some talk closer to the end of last year that we may see a change from that perspective, and may see a small hike in the US. I think as events have unfolded, that's possibly been put on a back burner, and as I say, it's all down to event risk this week, and everyone's all eyes on those two specific events, and also obviously the inflation coming out on Wednesday locally.
And of course, we know that a lot of the rand's fortunes are really dictated about by how the dollar and the euro perform. We have the dollar euro at just above 141 at the moment. What's your outlook for the dollar euro going forward from here?
Well, currently, we've had, I think from its highs, we've had the euro retreat almost 10 cents, and the guys in the technical basis are looking forward to a little bit of a consolidation, and even possibly a few euro gains as we go forward. Obviously, the whole Greece scenario and all the travails of the euro mechanism with Greece, Spain, Iceland, obviously still at the forefront of everyone's thoughts. But I think from a technical basis, we've seen a large correction in the euro, and today we saw a couple of buyers around, although I have to say it's been very subdued trading conditions within that market.